The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, 877-927-6648. Today is Friday, therefore Friday the May the 10th. Therefore we take a little more time talking about the ChapmanWave structurally. We had a question sent to me just moments ago by one of the avid ChapmanWavers out there, and we will certainly go through the question. It's a good question, but I don't think it applies here. So let's look at the overall picture. I'm going to show you a chart in a moment that I've never, ever shown before. I've never had the ability to do it, and I'm going to show it. We've got a Dow that's up 155 with the dollar soaring. I mean, the buy the dips mentality is just there, but it's not the buy mentality that is important. It is the three-letter word starting with a V, having a middle letter I and an ending letter of X. The VIX, the volatility index, that's going to be key going into next week. At this point, it's at 13.18. It still shows buying power. You can talk about anything in the world. Wherever have we seen the dollar scream up 2 points like this? And the market so far today, at least yesterday and today, just takes a little bit of a dip, and then the buyers come back in. There is something happening out there that we have to talk about, and we'll go through some of those factors as the show progresses, I'm sure, with the questions that we get. But most importantly, what I really want to emphasize is that within the context of the market, there is a very simple mentality that should be saying, and it is saying in some people in some areas, it only recently has it become kind of a mantra that's been exploited, in fact, and that is, where else can you go to get some premiums, some gains? And thus far, the only place that's given you a spectacular return has been, except of course in selective real estate. I mean, remember, we've got a wonderful dinner here that Len from Cape Coral, who he's out of all the people that you hear on TV and all that, Len is the guy. Len bought all the properties he could in the 1980s. He sold them he's from Florida. He sold them during the crash. In fact, just before the crash, he was busy selling. And then he bought back some of the properties that he had sold through the banks at an even lower price than he had paid for originally. And he went just fully vested. When I saw him in December of 2009, he said that he had just gone full in, he and his son. I mean, that's fantastic. So he obviously has got an incredible gain in real estate. And that was all rental properties. But it's a stock market. The Dow's gone from 6,500 to 15,000, nearly 200. And now people are talking about where can you put your money to. So it's really important to try to have a simple theme. And when we're looking at gold being smacked down $44 and the dollar screaming like that, you would say, wait a minute, metals are coming down, yet the market is holding up. Bonds are pulling back a bit here. The TLT is down $1.70. So let's make it as simple as possible. There is an uptrend that is a major, major uptrend. Within that uptrend, at this particular point, we're starting to see very, very selective moves. Some stocks are continuing higher. And there are some stocks that are becoming really toppy. We saw price sign on earnings yesterday. Still spectacular, but not as good as expected. Pull back. We've had a number of stocks break up with earnings spectacularly. Those are mostly stocks with very short interest, high short interest, as I should say, and in some stocks getting smacked to the downside. So now we're beginning to see that selectivity. this is the time. I said to subscribers this morning, we have 7 longs, way too many longs. Whenever I get to 6 or 7 longs, I'm saying to myself, uh-oh, we're getting near a top. Even if I'm looking at stocks that are still looking fabulous, it doesn't mean that I have to take them all. I have to be very selective. And now is the time to be looking at potential shorts. But I don't have the signal yet. So now let's go to the nitty-gritties. The Dow at this particular point is up 4 at 15,085. The S&P is up $1.77 at 1620. You've got the comp index up 12 at 3421. That's with Apple down about 4 points. Now, this is going to be quite interesting because within the context of everything we're looking at, gold is down 46 at 1421. However, the GLD, I'm going to use this chart. If you're looking at Tiger TV, let me just find it over here. Where did it disappear to? It was right here. It's gone. Okay, if you're looking at Tiger, there it is. Tiger TV, the chart, just before I go to the charts that I wanted to go to, this is the E-mini. And what I said, I think I said that yesterday during the show, but I said it to subscribers, if the E-mini doesn't make a new high at midnight today, and if it doesn't break above 1632.00, the high yesterday was 1632.25. If it doesn't do that today, it's made a peak C, but so far it's a very gentle inside bar peak C, number one. Number two is, this is the daily on the left. This is why I feature every day for my subscribers. Very comprehensive look at the markets, plus all our trades, etc. And this is the 120-minute chart, and it says that there are a couple of indicators that I'm going to spend quite a bit of time this week, as much time as I can this week. I won't have that much time, but I'm going to spend it on some techniques that I want to describe to my subscribers that at this particular time are not saying that I have a sell signal in place just yet, not in the S&P, not in the E-minis. So at this particular stage, we're looking at the 120-minute chart. This is the chart on the right. You see those lines? That's what I call, well, it's the Fibonacci extension. And it's a technique that I use. I only use it in certain places. A lot of people use Fibonacci's all the time, and I said, bravo, if you're able to use them, that's great. I happen to use them only in conjunction with other things. And the one thing I look at is when there's a price deviation between the MACD and the stochastic, as it is here, with lower lows and lower highs consistently, yet the price remains within, especially a kind of a rectangle formation, that is bullish on the shorter term. And it says there could be one spike. In this case, you've made a peak E-top at 1632.25. I just want to quickly reflect, because this is Technical Friday, back on what I discussed before, that at 1632.00, that makes a peak. At 1632.25, that just merely extends leg C. You have to have a top, and you don't know it's a peak, let's say. It doesn't mean it's a top. A peak. And you can't have a peak unless you have a lower high bar. That's why I call it high bars. It's very difficult in the ChapmanWave. When people actually come to my workshops or my seminars or my Master Trader series, the light goes on. And when people see my charts here and they're looking at them closely, the light goes on because it's so visually easy. What is a peak? A peak is if this bar is lower than that bar. But I have to say, the whole bar. It's not the close. It is the bar itself. So I use a lot of words, but I have no choice because I want to be as explanatory. I want to be as clear as I can. So the E-minis have held in a rectangle formation. By the end of the day, if there's weakness, because there's some nervousness over the weekend, we will see that the low of this Roman candle of 1620 will be taken out. Moment 1619 is hit, starts to go to lower lows. Next thing on Sunday night, you might be looking at 1617 as a target. Now, let's just say everything holds very well. What if we make a new recovery high today? That means that you cannot get a peak D until the very earliest, if we gap down on Monday, Tuesday. If there is a new high on Tuesday, you couldn't get one until Wednesday. But that's the futures. In the S&P, this is what I wanted to get to, SPX.X, look what's happened. It's slightly lower. It's going to be really tough for the S&P to go above 1635.01, the high of yesterday in the S&P cash. And it's peak E in the 120-minute chart, so you've got to be somewhat careful there. Now, the reason why I want you to go here is just to say that, before I say anything else, I just want to emphasize here, the one on the left is the daily. Usually the one in the middle is the weekly, and the one on the right is the monthly. But in this case, I've added the 120-minute chart because it's so important to look at. Now, the 120-minute chart on the 120-minute chart of the S&P cash is at up at $1.50 at 1628.16. But look at the technicals failing here. That says it's going to be really tough to make a new recovery high unless something fabulous happens maybe later this afternoon. And so let me run the numbers now. So we've got gold, and in the gold, you remember the GLD, I had said in the work that I do, a climactic volume spike like you had on the 15th of April at 130.51 with that huge volume, massive volume, highest volume. I'm expecting a rally. It says that the rally should not come back and retest 130.51 for quite a while, maybe 28 to even more bars. Let me see how many bars we've got. We've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. So what I did is I had already drawn in that arch formation, as well as the potential breakout of a ChapmanWave falling axe formation. But if this is the low, or tomorrow is some kind of a low in the gold contract, then you can expect. Now I'm getting clarity. Now, and this is what I discussed before, that I'm not talking about height, even though we had, in fact, the equivalent of the GLD, which took a 2% loss this morning. I don't hang around here. I'm sorry. I do not want to. I do not want to be some kind of a hero here. I'm doing this the best I can. The MACD went up to 80. What did it go to? I think 81% or 79%, and then it pulled back. The MACD, the stochastic, the MACD is held well. It's pulling back. Hasn't crossed negative, so I'm anticipating there could be another bit of a rally. But if gold closes underneath, if the GLD closes under 135.85, I'd give it a little room. 135. If it closes under there, hey. Maybe we will test 130.51, but this is saying we should hold higher. It's not giving you the price to the upside, except now I'm getting clarity, and it's saying that 143.43, you can break above it, but you won't go very much higher. Chances are we're going in a sideways consolidation pattern. No, a sideways, what's the opposite of a consolidation? Sideways resting period. Before we do come down and test the 130.50 area. So we'll look at what we've got. And silver's down sharply. High-grade copper's up. No, high-grade copper's down a tad. And bonds are down $1.50. I'll be back. Basil Chapman, Technical Friday in the ChapmanWave, and 877-927-6648. And we'll look at LinkedIn when I get back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman, Technical Friday. So let me do this because I have questions here that I want to answer right away. I'm liable to forget about it. Don't forget, folks, in the Boston area, a couple of things. First of all, Saturday, that's tomorrow. You're running out of time. You've got a meeting, you've got that workshop. Tom O'Brien, Daryl Martin, should be fantastic. There's a real buzz about it, and it's really if you're interested in alternative ways of looking at the market, of trading, that I think is absolutely imperative. Don't forget, you've got you've got the Tiger dollars. That's right there on the front page. Check it out if you're interested in my opening call or any of the other services. This is the time to get it, because to resubscribe or this is the best time. I mean, where in the market can you make that kind of money when you get a big discount like that? So check it out. And so I've got a question in the den from Zip. My opinion on LinkedIn. I have where is it? LinkedIn. Where was it? He wanted LinkedIn. Oh, that's it. Okay, got it. I have a losing position on my May 18 180 call, bought at 195. So let's do this. LinkedIn LNKD is a stock we owned, and we got out with two positions with very nice profits. I was very silly. The day of the earnings, I just forgot that it was the earnings. I should have not forgotten. And it had a fabulous move up, and it was in leg D. And leg D is where you say to yourself, hey, this is the time to be taking something off. And that was just dumb. I love the chart. The monthly chart is in leg C, social media, LNKD trading at 175 down to today. It went to 202.31 that day, and in fact, we got out the next day when it gapped down, but we gave away at least 15 points. That was right there for nothing, because I should have raised the stop just the way I like to do it on earnings, just to raise it when you've got a really nice profit. You take a chance, and at the close, we could have taken something off. So my apologies for not making more money. That's number one. Number two is there's a pattern that I call the H pattern. So it's gone straight down from 202.31 to the low the next day of 173.72. The 9-period moving average. Now, if you're looking at Tiger TV, I'm going to make it a little bit bigger so you can see what I'm looking at here. This is this is the daily chart. And you can see that extension. And if I was looking at this and then I looked at the pullback, I would have said, wow, although that's a leg D, it also looks like a right arm extension in the ChapmanWave methodology. And then I looked closer and I said, no, the MACD and the stochastic were in line. But the MACD was way lower than when it made highs back at 184 back in March. So that was the divergence I should have picked up on and said, hey, whoa, wait a minute, what's going on here? And it walked the 9-period more. It didn't walk. It was leaping above the 9-period moving average. Never even came back to that's the black line. Now, this is the thing. It's making the H pattern the base of support. And now this, to me, is going to be really important because I think even though they gave an outlook that was really not as favorable as everybody wanted, in my understanding of the stock, and I don't actually know anything about it, I don't go to LinkedIn, I have nothing to do with it, so I'm just doing it based on, I didn't mean that, based on both the chart formation as well as the history of the stock being in a wonderful, incredible leg C up in the monthly chart, and the weekly chart is quite good. So I'm looking at it and I'm saying, okay, on a shorter term basis, the 180 level is going to be very important to hold. There's a left side, right side price time actually says it might test did I say 180? I mean 172. My mistake, 172 to hold. That it could test that, but it's going to have to do it by the 15th. What's the 15th? Wednesday. But if you're looking at options, it's going to be real tough because today's an up day. Generally in the market, not great, but it's up, and especially considering the amount of pressure to sell off. And yet LinkedIn is not doing all that well. It's not doing badly, but it's not doing well because it started off and went all the way to 179. Now it's at 175. So this is what I'm going to say to you. If you're looking at the 120-minute chart, the 120-minute chart has the same pattern, but it is holding the 200-period exponential moving average. It's treated as a right side successful test. So far, the MACD and stochastic are not great. Stochastic is not great, but the MACD is actually a little bit better because it is at least attempting to hold to the plus side. Okay, this is what I'm looking at. If by day's end, it doesn't break under 174, and by Monday, there isn't a big sell-off. Instead, there's some kind of doesn't have to be a big rally, but there's some kind of a rally. I'd be looking at this and I'd say, if it's able to break above 179 to 178.30 by Tuesday at the latest, and you'll be seeing a shrinking premium in your 180, then there's a chance, just a chance, that when the S&P, which I expect, goes to leg D, it'll rally. I'll be right back.
TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at tfnn.com. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of tfnn.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of tfnn.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of tfnn.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of tfnn.com.
Hi, everyone. Basil Chapman, Technicians Hour. Wow, it's just been a slew of questions and stuff. I think I had a thought that I never finished before, and I remembered it during the break, but then so many things happened that I can't remember what that thought was. It doesn't matter. There are plenty of thoughts to go through. Well, first of all, LinkedIn. Let me just write this down. I don't want to forget it. The IWM was a comment. The euro was a comment. The dollar was a comment. Okay, I've got them all written down. Here we go. So LinkedIn, as far as I can tell, is just digesting huge gains. That's what my thought was. My thought was that LinkedIn, I think, is still, from what I understand, the premier social media content and business provider out there. This is the way I understand. I haven't even been there. I'm just listening to what people have said. I'm listening to what technical analysts have talked about in terms of the stock. I'm trying to piece it together, and all I can say is that the action is telling me that, yes, the weekly chart says that it's going to be a tough time trying to get back to the highs, but if at any point it gets to 192.70, right in the middle of that, to 192 to 194, the middle of that inverted Roman candle, it's going to try to retest 202.91, but it needs time. And that time says it could go into this trading range between about 183 to 170, even 171, 168. But that's what I'm looking at. Now, as far as next Friday is concerned, let's go one step at a time. The action today is okay. It's not great. It's okay, but it's really good considering what's happened to it. If perchance it's able to go to 178.20 at any point, and then remind me on Tuesday, let's look at it again, Tuesday or Wednesday. But if it's able to get there, that is excellent action. And then I would say to you, what I would do is, as it gets closer, you can't now wait for it to get to 180.20. But as it gets to 179.80 or 90, if it does that, take something off and then leave something on, because if it can get there, it's going to pop to 180.75 and then probably close the week under 180. Just squeeze the short, squeeze the longs. That's my thinking. Let's see, Zip also asks, thanks. P.S. Basil, thank you also for a great call on NVIDIA. NVIDIA. I remember it was looking good. Yeah, fantastic. Oh, must have had earnings news today. So this is, this is either G or brand new leg. I have stocks that I'm looking, not I have, there are stocks that I'm looking at that are actually breaking out into leg B and leg C. And that says, wow, if there is a major market turn down or serious market turn down next week, how will these get to that leg D? And some of them are so strong technically. I stayed with the DDM, the 200% long for my subscribers. We've raised the stop on half. All I can say is that thus far, I've not got the signal I've been waiting for. Now, let's just quickly do the Euro, EUR, USD. Then I'm going to get to that S&P question. Euro is making a U-turn. It's turned around from a peak D. It went underneath a very important support level. That was the support at 1.29536 back on the 24th of April. And that says you got to watch it closely. Why? Because the dollar, DXY, now I'm a tad behind on the dollar. Not a tad, I'm probably about 20 minutes behind. Is up 43 cents. Let me just have to check if it has a list here. Dollar. Find the dollar. Can't find it. Oh, it doesn't matter. I've got it. It's just a little bit behind. The dollar is in a brand new leg B, but it is underneath the 83.49 major high of peak G, 83.49, the 4th of April. So at 83.50, something very important will be happening, and that will say, great, it is now having a much better action and reaction. But if you look at it on the weekly chart, all it's doing is just bouncing between these levels. If it takes out 84.10 in the next week, that's going to be the first serious break to the upside that says 84.10 takes it above the July high of last year. That's going to be leg B or E/B. And that's going to be very positive because it says, you know what, the dollar could go to 86. And that might coincide with our digestive period that we have in the market. So that's that. That's another question. Okay, now that S&P. You see, there's no other way that I can count the S&P. The question was, is this a ChapmanWave flat-based restart? So this is for those of you that have done my more advanced courses. There's no way. I've just been through this so many times. That low at 1536 is much lower than the low at 1539.50. Not much, but it's lower. And I wouldn't even know how to count that. Could that be A and this is really B? No, I'm happy this is a C. It's a leg C. The technicals are really strong, which is one of the reasons why it's just not selling off. If you understand the way I use technicals, the weekly is in leg E. It is getting a little bit toppy, getting a little shaky in the MACD and stochastic, but it's still very strong. It's bumping into the resistance. Now, there's another question here. In the den, folks, the den is just a fabulous medium. KJS says IWM leg D starting. No, I think I have it still in leg C. I might be wrong. Yeah, no, this is still leg C. IWM, this is the Russell 2000 ETF, and I mentioned this the other day, was still in a very strong up move. And the MACD and stochastic are holding very well. The stochastic's at 98%. The MACD is still strong. And this is very important because it went to 96.64 this morning, which is above the high of yesterday of 96.51. So merely extends it. That means the IWM cannot make anything like a peak D until the very earliest Tuesday if there's an immediate sell-off with no new high bar on Monday. So that's and leg D in the weekly. Let's go to George in New York. Hi, George. How are you?
Basil, good morning. How are you today?
Haven't spoken with you for a long time. How are you doing?
Yeah, fine. You haven't spoken to me because I've actually just been pretty long the market so far.
Good.
And it's been working out well. The question today is on Staples, SPLS.
Yes. So SPS, let me just tell the folks, SPLS is Staples Inc., Office Staples Equipment and Supplies. It's trading, let's see, in the daily chart, this is now leg, the peak C with a D still to come. In the weekly chart, that is the fascinating chart with that explosive move that failed back on the 22nd of February of this year, and now it's repairing the damage with an inside A, B, leg C, kind of a rectangle formation. And the monthly chart is the one that really fascinates me because it's in a very strong leg, a peak A. No, I shouldn't say it's in a very strong. It held. There's a left side, right side price time match, which I typed in, I don't know how many, maybe a year ago. And that said that sometime from the low bar that I chose from back in November of 2009, there should be a retest somewhere around September of 2012 of the somewhere around the 10s, when it went down to 10.68 in September, had a very strong move leg A, then it became peak A, and it's holding the 9-period moving average with 50.57, just 2 points higher, 1.5 points higher, with a 200-period exponential moving average is. Now I'm going to ask you, tell me a little bit about Staples.
Okay. Well, as you know, of course, retail office supply, but they are major suppliers also on the wholesale end to, large businesses such as department stores like Saks Fifth Avenue, other things.
Okay.
All right, with that said, I have the company for a very long time. And I've recently, and I think you're aware of this, I had added some January 14 calls as well as naked puts on this. And what I did was January 14, it was a $13 call, and I did naked puts with a 10 strike. So everything's working out well. But most importantly, they started to bring in Apple accessories, and it looks like going into the fourth quarter we may get Apple products going in because their Canadian stores have Apple products already. So that's going to be a very good sign. The other thing is if you go into a Staples store, you see they are departmentalized. What I mean by that is they have a printing division within the store.
Right.
They have an Easy Tech division that repairs computers, removes viruses. That is very successful because I've done channel checks. And they also have a cell phone division that sells cell phones, all assorted brands.
And they also have the large stores as well as the small stores where you can get just the basic staples for Staples.
Absolutely, absolutely. And most of all, they've been paying a dividend, and the dividend is today it's 3.25% based on the $14 price. And the dividend has been growing the last 10 years, I would say compounded 13%. So the only problem is the earnings have been slow, and of course that's because of the Great Recession too. So, and because Staples is a large cap company, it's a slow mover for it to turn around.
So, it was a mystery to me, and I think you're quite well aware that I was screaming at the guy Stenberg, whatever his name was, who was on all the time talking politics throughout the whole of last year, or throughout the whole of, when was it, last year. And I kept on yelling and saying, get back to business. Why is Staples down in the 9, 8,
well,
10?
He's actually chairman right now, and he actually runs a hedge fund on the side. It's
yeah,
Sargent,
so that's,
I think, is the CEO.
That's what I figured. That actually is doing very little. But I have to tell you something. Looking at the stock over the constructive element of the stock over the last, let's call it it's more the last 4 months than the last year. It's made a U-turn in the weekly chart. The monthly chart is under all the pressures. It's refused to give back very much on any of the weak months that we've had in the market. Not that many, but any of them. And I believe that there is a turnaround going on in staples that we will only recognize when it's actually in the 16.5 to 17 area, which I think it's going to get to at some point. So now here's my thinking. You're in exactly the right positions, and they're working for you. I've got a rectangle formation in the daily chart, just on a very small-term basis, saying 13.67 is the 9-period moving average, but 3 days ago the low was 13.82 and the high was 14.27. This particular formation says there could be one pop towards the 14.31, maybe 14.40 area. Maybe I don't know about 14.40, but somewhere around there. And then it could pull back again. That pullback is going to be really important both market-wise and staples-wise coming into the last week of May, the beginning of June. In fact, I'd say the beginning of June into the second week of June. And here's what I'm thinking. The stochastic in the weekly chart is trying to turn back up. The MACD is still acting very well. It's got this pattern that I call the dolphin pattern. It looks like a little opening of the mouth there. And that's a very technical term, of course. But 1335 is the support in the weekly chart, and it closed above it last week, and it's held it as a pirouette to the upside this week. So I like it. Now the same pattern that I'm looking at in the rectangle formation in the daily says that if it was to break into the 1440s, not only would that be a strong leg C if it's by next week, but it says that that high of 1519 on the 22nd, I think that was some kind of announcement, a link or something that we're going to do. I don't know what it was. I remember at the time it was a big spike up, but I didn't follow it after that until later on. I saw it pull back. That high is really what you want to get to, because on the left side you've got a doji with a high of 1518 from the 11th, from exactly today, 1 year ago. In 2012, it needs to climb above that. I would prefer that that the downside support keeps holding, and there's a stair-step move. I would like to see staples at $15.65 in another 2 weeks, with no one even talking about it. The stealth move to the upside is exactly what I think is going on in the business, because they failed. Like Boston Scientific did that. It was horrible, did everything wrong for so long, and then slowly they got things right. Now it's turned around. So I think this is in the same. I think you've got a fabulous stock. I know you like to do long-term. And
they're going to have earnings, if I'm not mistaken, May 21st, I think.
May 21st. Now, let's just imagine.
I don't think they're going to be great because of the Windows 8 debacle.
Okay, well, what I wanted to say to you is, if they are weak, but staples manage to hold above $13.30 or close above, it can break under it, but by the end of the week, it closes back above into the 1350s, I think that'll be the sign to say, great, staples is now, it's got resiliency and buoyancy. So great. Thanks for bringing it to our attention, George. Another great one that you've called in about. I appreciate it. Thanks, and have a great weekend, George.
Thank you as well, Basil, and thanks for all your help.
Thank you very much.
Weekend.
You too. Folks, this is the Dow's down 15. S&P's just unchanged, up 52 cents. Fascinating period. Struggle. This is a little different to what we've seen before, and I'll talk about it when we wrap up the show in the next segment. I'll be right back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, folks, a little while back, I typed in here with the Euro, EUR-USD daily chart. There are 3 fighting patterns, and we've got a lot, actually, I shouldn't say some. We've got a lot of folks now that are really using the ChapmanWave methodology to great advantage and using a lot of the techniques that sound complicated but are actually quite simple once you just identify them with 2 straight lines or a curved, an arch or a cup. And MMS in the den said a little earlier, I said, Basil, you're a reverse falling axe pattern. Yeah. That's it. 3 fighting patterns. What was it? It was the potential for a cup, an arch formation, and that arch formation would take place by having it rally to a C or maybe a D, which it did, and then come back down. A falling axe, but an inverted one that said, theoretically, if you break below the support level, in this case the support level would have been at 1.306, then it concurs with that falling axe arch pattern, and it comes down. That's exactly what's happened. And then the third one, which I mentioned, was the channels, and I drew the channels in over there and there, and the channel now is broken. So that says that the euro, you got to watch it, because below 1.3039, the low of the 5th of April, it's going to probably retest the low of 1.274, and that is giving pressure to the market, besides the dollar acting so well. Now, our dollar is no question about it. At 83.50, it's the high today so far, 83.44. It does break out, but it needs to break out decisively, and then I can say, yes, this is definitely a confirmed leg B up, if that's still leg B, but it's going to be the weekly chart of the dollar. Putting it into the historical text, or context, I should say, it needs to go a lot higher to show that it's breaking out, and then it has the capacity to go to the 86 level. And this is coinciding with what I'm looking at, with a potential one big spike, suddenly an emotional news-related spike tomorrow. We don't have to get it, but we've got the Dow already in D, probably a peak D. I want to see the S&P go to a D. I need to see it. I like complementary patterns, and that's what I'm anticipating. This is the time to start looking at shorts, but you've got to be selective. I got to tell you, there are a lot of squeezes that have been coming on with a short speed. You look great, and next thing it goes high. Be careful. So yeah, let me give you my summation now for the week ahead. And I will not be here on Monday, but I will be doing my newsletter. So I'm going to say right now, have a great weekend. Stay tuned. You've got Friday today, of course. You've got the most fabulous health program. You got Nico coming up, and Paige, and that should be fabulous. So here we go. The Dow, INDU. Oh, I'm going to show this chart quickly. I had it all the way in the background. Look at this chart quickly. This is, I'll give you one guess what it is. It is, time's up. This is the Dow Jones going back to before 1920. It should look like this. Where is it? Oh, quickly. It should look like that. But if you do it, that's arithmetic. I like arithmetic. I love arithmetic. But if you do logarithmic, which smooths it out, not quite the right term, look what we're doing. We're in the upper channel resistance area. This goes back to 1920, back to the low of $42 back in 1932. And now we're at 15,053, all-time highs. And look what we're doing. We're going in beautifully in this channel. If we can break above, if the Dow at any point in the next month can break above 15,300 on this channel, on this chart pattern, that says that monthly is absolutely correct, that I do in my work, which says the monthly is still in leg C. Quickly on the Dow, what I'm watching for is the Dow to give me one more new recovery high just above 50,145. And at that particular point, I believe I'll be looking to see how the technicals are formulating, what's going on, and then we might be getting some kind of a signal to say, okay, time to switch from the long position to go short.